Welcome to the Capital News. I'm your host, Alex Karitis. Today is Wednesday, December 2nd, 2020. Thank you so much for joining me. Title of today's podcast is a Small Biz Pulse Check. We're going to review a few different surveys that have been released and just a couple other data points related to small business, related to the PPP loans. But we're also going to talk about some other things, particularly the housing market briefly as well. Just to provide a pulse check as to what's going on in the economy. So we've been discussing this for quite a while, obviously. That's the point of this podcast. But what we're going to focus on is the continuation, the consistency with what we have been witnessing across different surveys over the past several months, in particular with a focus on small businesses. We have known for the past few months that if small businesses did not or do not receive further assistance from the government, that a significant portion of these businesses will be closing their doors for good, will be cutting their hours, or will be cutting staff, or a combination. Now, of course, these small businesses could perhaps go out to a bank, but it appears that the banks don't want to lend them money. And we know this to be the fact of the matter, too, because we hear this time and time again in testimony and during the press conferences of Jay Powell, the chairman of the Federal Reserve. We have these emergency facilities. We have all of these programs that were created within the Nobody Cares Act. And you're going to continue to see today why I have been calling it the Nobody Cares Act. But we have been hearing this from our central authorities. Well, the banks don't want to give money. They don't want to lend money to these small businesses because they're going to lose. They're not going to get their money back. Despite the fact that these programs have been created for that very purpose. Our tax dollars, these emergency facilities, other things created from the Nobody Cares Act, greatly benefiting the banking sector, especially the major banks, as we have been seeing with respect to their trading desk and the profits that they are pulling. Because the Federal Reserve, in conjunction with the federal government, meaning you and me, the taxpayer, are backstopping any type of loss. So what does that mean? Oh, well, let's go out and splurge. Let's go out and raise as much debt as we possibly can. Let's issue as much corporate debt as we possibly can because the Federal Reserve is going to backstop it. They'll buy it directly. And I don't care what the amount is. I don't care if it's $1. They should not be doing it. And in fact, it's illegal. It's against their charter. They should not be doing it. They shouldn't even be purchasing mortgage-backed securities, which they have been doing since the great financial crisis. I don't like the fact that they buy government debt across the yield curve. You know me, those of you who have been with me, I don't want the Federal Reserve to exist. They should be abolished. It's a travesty. It goes against our entire system of checks and balances. As far as I'm concerned, it's unconstitutional. Get rid of it, in conjunction with the federal income tax. And it's no coincidence that both of them came into existence in 1913. Banks don't want to lend money because they know what's going to happen. These small businesses, a lot of them were already just saturated with debt to begin with. Again, this is part of the zombie economy. 20% of U.S. companies can be classified as zombies. Too much debt. They should be going out of business. They should be restructuring. That's what should be happening, and there should be no bailouts. My problem, of course, comes from, well, if you're going to give money to the largest of corporations, if you're going to bail out the largest of banks and other institutions, not just American companies, but again, global companies, then why can't you help out the small businesses, especially when I thought that was the purpose of all of these programs, to help the little guys and everybody concerned about the little guy? Well, they're not. They don't care about you. They don't care about us. That's why this is the Nobody CARES Act. This is why wealth and income inequality continues to get worse and worse. This is unsustainable. History tells us this. This is unsustainable economically, politically, and socially. All of these things are coming to a head. The writing has been on the wall for the past couple of years. And we have been highlighting these facts on a near daily basis during this podcast. So let's get to some market performance, and then we'll get into some of these surveys, and then a couple other quick points that relate to something I brought up yesterday with respect to New Zealand declaring a climate emergency, basically leapfrogging from one crisis to the next. You know, never let a crisis go to waste. Right now, the emergency, of course, is the pandemic, COVID-19. New Zealand, Prime Minister down there, she's a darling of the status quo of this system. Okay, everything apparently seems to be fine and locked down when it comes to having a handle on COVID-19. So let's move to the next thing already. New Zealand declares a climate emergency. We already have a couple more headlines coming across the wires today with what I was warning about because I got a good BS indicator here, a good BS warning signal, and I just did not like that headline that came across Bloomberg News yesterday with New Zealand declaring a climate emergency. So something's up here. Watch this to be a trend, and we're already starting to see it the very next day. And as I stated yesterday, if you see these headlines, you see these stories, send them to me, and I will happily share them with the audience, because this is going to be another mechanism for the powers that be to control the people. But market performance, we have the dollar index trading at 90. Spot 97. So we are below the 91 handle. We are at levels not seen since April of 2018. Again, I have been stating that probably we'll see some strong support with respect to the dollar index around the 88, 87 handle. So we still have a ways to go to the downside, but there should be some relatively strong support there. If we should break through that support level at the 88, 87 handle, look out below. But just for some perspective, a little bit of historical context here, we were well below these levels 2012, 2013, 2014, 2015. We were trading at 80, 75, and the world kept spinning. Okay, so I'm not here to scream fire. I'm not here to scream that the sky is falling, but this is clearly something to be mindful of, because as the Federal Reserve continues to print money like it's going out of style, so long as the federal government continues to spend money that we don't have, well, this is going to be something that is likely going to continue dollar weakness. All right, net, well, regardless of whether there's a swan song and a massive reversal with respect to the dollar index or not, net, the dollar's going down. They're all going down. Fiat currencies are collapsing. If you listen closely to a lot of these central bankers, they're all talking about some form of digital currency because they just want to distract everybody. They just want to move to a different narrative. All the paper's worthless, but somehow something that you can't touch or see is somehow more beneficial. Okay? Just get ready for what they're going to be ushering in, but that's coming. So again, dollar index is below a 91 handle. We will continue to monitor closely. The euro to the U.S. dollar is trading at $1.21. It was at $1.20 yesterday, so that was quite the movement on a daily basis. The U.S. dollar against the Swiss franc is at 89 cents. This is the lowest it's been in quite a while, I think several years. Let me bring that up just to confirm that for you. Yeah, several years. We're going back to about 2015, it looks like. Yeah, 2015. So the Swiss franc is typically viewed as a safe haven currency, as is the Japanese yen, and the U.S. dollar as well, depending on the circumstances. But this is a trend that has been continuing for quite a while, and I imagine it will continue at least until we perhaps touch that 88, 87 level, and we'll see what happens from there. On the index, we have the overnight futures trading with the Dow Jones Industrial Average flat. Same for the S&P 500. The NASDAQ 100 is in the green, up 0.2%. Cash trade in Japan is currently flat, and a mixed bag across the pond in Europe. Cash trade in Australia is up 0.5%. On the commodity front, we have WTI trading at $45 a barrel. Brent at $48 a barrel, natural gas at $2.75. Gold and silver holding their own today. A little bit of a choppy session, but nothing drastic in either direction. Gold is at $1,833 an ounce. Silver is at $23.96. Rounding it out, Uncle Sam's 10-year junk note is yielding 0.94%. So with that 9 handle, what does this mean? Well, to me, the bond market should start to be pricing in inflation. To me, this should be continuing higher. I mean, a true market yield, a true market interest rate would be much, much higher than this, which would basically cripple the economy. And unfortunately, that's what needs to happen. That's the correction. When you want to continue to prop up companies that should not be propped up, your zombie companies, when you continue to kick the can down the road, when you continue to lie, when you continue to not take responsibility, this is what happens. We couldn't tolerate a federal funds rate of 2.25%, 2.5% in 2018. Now, with everything that has taken place since then, we're not going to be able to tolerate 1.5%, if that. That's how fragile this system is. And of course, the stock market just continues to go higher and higher and higher. Because we are in a mania. We are in a speculative bubble. We are in a currency crisis. It's not that these stocks are more valuable. It's that the dollars in your pocket are worth less and less and less. Which is why I am a long-term bull with respect to precious metals. Because that's real money. And it has been. It's proven the test of time for thousands of years. So I'm happy betting on gold and silver. Look into it. We'll get to the surveys, but first, just a couple headlines with respect to the New Zealand declaring a climate emergency. So we have Japan considering placing a ban on all sales of gasoline cars come the next decade. That's a ban. It's one thing to have a lofty goal to say we want 80% of all sales to be electric or hybrid or something like that. This is an outright ban. Now, whether or not this passes or not, the very fact that it's being contemplated and discussed should be concerning. Because what guarantee is there that economies of scale are going to kick in with respect to electric vehicles and the whole supply chain and all of the components that go in to manufacturing those vehicles? There is no guarantee. So what's the rush? What's the concern? Are the car companies ready for this? Are they going to be able to retrofit all of their operations to completely get rid of gas-powered vehicles for Japan, which is a big market? I mean, come on. I mean, Japan is a powerhouse when it comes to auto manufacturing. Just going to flip a switch? This is ridiculous. It doesn't matter where you are, folks. This is the problem. This is the fundamental flaw of all governments. They're institutions of force. They don't care about what's right or what's good or what makes financial and economic sense. Whatever feels good, whatever gives them more power, whatever they can say to each other in their cocktail parties to please each other, that's all they're doing. It's a game. And of course, we the people, no matter what country you're in, has to pay the price. I'm all for clean energy. No ifs, ands, or buts about it. But you have to allow the markets to work. You have to allow economies to scale to kick in. You have to allow entrepreneurs to come up with the best ways of doing things. This cannot come from government decree. It just never works that way. And unfortunately, it appears that the Japanese government is going to go down that road, and I'm sure many others are going to follow. And then also in this same vein, we have the United Nations Secretary General coming out and saying, well, the United States should take a bigger leadership role with respect to climate change. So here we are, folks. One day after seeing the headline about New Zealand, We already got this coming out. Can't make this stuff up. So you bet you're behind. Once we get these vaccines, once this thing starts to get a little bit more under control, if that's how they want to play it, we're going to be moving on to the next crisis. Make no mistake about it, and it's going to be climate change. I mean, this is somewhat easy to see. The writing's been on the wall. They've been talking about this for a long time. I'm not claiming to be a genius in seeing this, but the fact that you're starting to see an increase now in these types of headlines, in these types of media reports, to me just signals that this is going to be the up-and-coming, quote-unquote, crisis, disaster that is going to justify, from the perspective of the governments, different types of restrictions, lockdowns, banning sales of this, that, and the other, all for the goodness of the climate. Okay, so just get prepared for it, because I imagine that's what's coming down the pike here very, very shortly. And in with many respects, it's already here. So, some small business surveys. First, let's look at the PPP loans, okay? Most PPP money went to a fraction of the recipients. Well, who could have thought that? Paycheck Protection Program loan value totals by percentile, okay? The top 1% of loans account for more than 1/4, 25% of all loan value. I'll repeat. The top 1% of loans account for more than 1/4 of all loan value. The top 5% of loans account for more than half, more than 50% of all loan value. Now, is it any surprise that so many small businesses have been stating for months, if we don't receive further government assistance, we are closing our doors, we're cutting hours, we're laying people off, some combination thereof? You see? Nobody cares. Nobody cares. You think this is by accident, or you think this is by design? I think it's by design. Next. This is another recent poll. 48% of small businesses risk closing for good. This is a sample of some 9,200 small businesses from the time period November 21st through November 24th. So again, 48% of small businesses risk closing for good. These are the small businesses that still remain. What about the ones that have already gone? Well, they're gone. So we're still about 50% of what's remaining. You understand why I call this the Greatest Depression? You understand why I call this super duper miraculous V-shaped recovery a bunch of bull? You understand? Most impacted industries: travel, gyms, beauty salons, retail, and restaurants. No surprise, this has been the same song and dance since the beginning of these restrictions. And in fact, these things were going down beforehand. Don't ever forget that. Please don't ever forget that this economy was rolling over before COVID-19. Trillion-dollar deficits before COVID-19. Don't forget that. So with respect to travel and hospitality, 62% risk closing for good. With respect to gyms and fitness centers, 61% risk closing for good. Beauty salons, 60% risk closing for good. Consumer retail at 50%, and restaurants at 45%. And to me, it's no surprise that restaurants are at 45% because so many restaurants are already out of business. They're gone. They're closed up. A lot of major cities are ghost towns. These shops, these restaurants aren't opening back up. They're not going to, unfortunately. It's just not going to happen. This is devastating. You understand why I've been talking about the tsunami of insolvencies and bankruptcies coming? From months ago. Check the podcast. Months ago, we've been predicting this and talking about this because a printing press does not print jobs. A printing press does not print profits. Well, not for these small businesses anyways. It can't for the major corporations. but not for these small guys. And they don't care about the small guys. That's the PPP loans. That's the emergency facility within the Federal Reserve called the Main Street Lending Facility. What a crock, you know what that is. And again, the chairman of the Federal Reserve comes out and says, well, the banks don't want to comply with us. You're the regulator. The Fed is the regulator of the banks. Tell them what they have to do. Congress has appropriated this money. You want this money? This is what you have to do. Well, they say, screw you, we're not going to do it. That's exactly what happened in the great financial crisis. They brought the global economy to its knees. Oh, well, we're going to give you guys, $800 billion. We're going to divide it up, boom, 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 boom. And here's what you got to do with it. Nope, not doing it. Not going to take it if we can't give away golden parachutes, if you're going to limit our compensation and anything else like that. And who backed down? The government did. The government did. You understand the system? Devastating. 48% of small businesses risk closing for good. That's what's still remaining. Looking at the small business index, small business jobs index, I should say, we are at now levels below where we were during the great financial crisis. So over the past several years, we've been north of 100 on the small business job index, peaking around 2013, 2014, and rolling over ever since. So again, for this, this dream of the best and greatest economy ever, again, is just a load of BS. That's all it is. That's all it is, because the engine of the U.S. economy is small business. And small business jobs index peaked around 2013, 2014, has been rolling over ever since. During the depths of the great financial crisis, just for a little context, we were about 95. We're now at 94. So we have surpassed that to the downside, and it is trending lower. And if the previous poll remains true, and I imagine that it will, this was an alignable poll. Other polls and surveys that we've discussed were out of Goldman Sachs primarily. But if that remains true, then this figure is only going to get worse. It's only going to get worse. And then tomorrow's Thursday, so we'll get initial jobless claims. This Friday is the first Friday of the month, so that'll be the official jobs report. So there's a lot of data coming out, and we're just going to see what's under the hood and what's really taking place here. But there's still a lot of distortionary effects making its way through the marketplace, which makes it difficult to get a clear, vivid picture of the jobs market. This has been what I have been stating for several months, because that's the truth of the matter. You want to throw trillions of dollars around, you're going to have distortionary effects. You're going to make it seem like things are okay, but you can only do that for so long. That's like maxing out 10 different credit cards. You go buy stuff, you go on nice vacations, your neighbors, your friends, your family, they think you're living it up. They think you got it made. Well, you don't. You don't. It's all a charade. It's all smoke and mirrors. That's exactly what our government's doing. That's exactly what our central bank's doing. That's exactly what other central banks and governments the world over are doing, have been doing, and they're going to continue to do it. Because we almost have a daily headline of some central bank somewhere saying, oh, keep the stimulus going. Keep the stimulus going. Federal government, wherever you are, keep doing something. Doesn't matter what, just do something. And we will continue to keep rates low. We will continue to expand our balance sheet. They know what we know, folks. They know this is the greatest depression. They know they're responsible for it, but they will never take responsibility. So this is what we have to deal with. Okay? Here's something else just with respect to employment. This is overall. This isn't just specific to small business. This is everything. So here's a percent change in employment by sector. Okay? Percentage change in employment by sector, February through October of 2020. So, leisure and hospitality, still down 21%. Mining and logging, still down 13%. Educational services, down 10%. Information services, down 9%. Other services, state and local government, both down 7%. Professional and business services, wholesale trade, manufacturing, transportation and warehousing, Healthcare and social assistance all down 5% still. Construction remains 4% below where it was. Retail trade down 3%. Financial activities and utilities both down 1%. However, federal government is up 4%. Ain't that dandy? And is anybody surprised by that figure? That the percentage change in employment by sector for the federal government is up 4%. You see what's going on here, folks? It's the Nobody Cares Act. It's the Nobody Cares government. They care about themselves only and those closest to them. And the vast majority of people have to pay the price. Higher taxes, higher inflation, higher costs of living, lower living standards, fewer opportunities, more debt, etc., etc., etc. It's not a pretty picture. And I don't like talking about it, but it's the truth, and that's what I have to talk about. I wish this wasn't the case, but it is. And I'm not here to lie to you. Here's another one. With respect to the housing market, because we still have all of these evictions waiting in the wings, don't we? Serious delinquency rates on single-family residential mortgages. January 2019 through August of 2020. And if I had to guess, I would think that these numbers are even worse now, unfortunately. So these would be percentage of loans 3 months or more past due or in foreclosure. With respect to FHA loans, we are now north of 10%. Well, what does that mean, right? Well, before all of this started, before all of the lockdown started, let's just go back to January of 2020. We were at about, let's call it 3% delinquency and foreclosure for FHA loans. We are now north of 10%. Not good, folks. Not good at all. With respect to Fannie Mae and Freddie Mac, we're at about 3%. And this is leveling off because of the eviction moratorium, right? So we're about 3%. Once these get lifted, I imagine this number is going to go up too. Prior to COVID-19 and well into 2019, we were below 2%. I mean, I don't have the actual figures in front of me. I'm just looking at a graph. I'm just eyeballing this. This might have been below 1% with respect to Fannie Mae and Freddie Mac loans. But now we're north of 2%, call it close to 3%. So basically a tripling in the rate with respect to FHA loans and Fannie Mae and Freddie Mac, but of course much more significant with respect to FHA loans, north of 10%, call it 11%. 3 months past due or in foreclosure. It's all heartbreaking news. It's all heartbreaking news. This is why this is a first world banana republic. And of course the solutions, and I use that term loosely, is just to do more of the same. That's all. Don't take any of this stuff seriously. Don't do anything to get our fiscal house in order. Just keep giving people money. Just keep flooding the markets with liquidity. Keep jacking up the stock market. All these markets are busted. They're all busted. It's an extremely dangerous and volatile time. And we ain't seen nothing yet. Because when you throw trillions of dollars into the system, you're going to be able to prop some things up for a little bit longer than most people anticipate. But are they going to be able to do it forever? And if they do, is that what we want? Talk about command and control. There's no more markets left. It's one thing for markets to be busted. It's another for them to be completely gone. Well, if we continue down this path, they're going to be gone. But I'm hoping for that day of reckoning. I really am, because that's the correction. That means there's still hope out there that some semblance of free market capitalism or just free market functioning still works. And that's what can put these people into retirement. And that's what we need. It's not going to be easy, but it's what we need. So that's a small biz pulse check. Tomorrow is Thursday, so we will have the updates to initial jobless claims. Again, the past 2 weeks have been in the wrong direction, have been moving higher. I anticipate that's probably, unfortunately, going to be the case with tomorrow's figure as well. Money stock, Federal Reserve's balance sheet, what have you. And then on Friday, we will do the jobs report. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.